So if you're someone who owes the IRS $50,000, $100,000, or even more, one of the first questions you may have is, can I get into a payment plan? And if I can, what's that going to look like? Well, the good news for you is there certainly are options. But the reality is, once you give above $50,000, the rules change, and choosing the wrong option can make things worse. So you have to understand the rules and find the right option for you. My name is Bob Jablonski. I'm an enrolled agent and certified tax resolution specialist, and I work with taxpayers in dealing with large IRS problems every day across the country. In this video, I'm going to walk through with you the real payment plan options that are available when you owe over $50,000 and what you need to watch out for. So, first of all, most people think I'm just going to call the IRS and set up a payment plan. And for small balances, that's often true and it's often not a problem. But once your balance gets over $50,000, especially in that $75,000 to $250,000 range, the IRS looks at your situation very differently. They're going to want financial disclosures from you, proof of your income and expenses. They're going to want to see your assets and so on. They're going to want to know exactly what your financial situation is. And they're going to want a plan that fits within their guidelines. And that's not necessarily within your best interest. So this is not a one size fits all situation. So let's talk about what some of your options are. First thing the IRS is going to ask you is, can you pay your debt in full? And I guess if you can pay your debt in full, you don't really need me in this video, right? But you're looking at what are some of your options if you can't pay in full immediately? Well, they're going to look for, first of all, a full pay installment agreement. And this is the most straightforward option. You're going to set up a monthly payment that's large enough to pay your debt off before the 10-year statute of limitations expires. And this might work well for you if you have strong income and you can afford larger payments. The reality is, what the higher your debt gets up, the larger those payments are, and the more difficult it may be for you to qualify or to actually be able to live with a full pay installment agreement. So if you can't make that the dollar amount that's required for a full pay installment agreement, you may qualify for a partial pay installment agreement. And that's where things get a lot more interesting, right? With a partial pay installment agreement, you're going to be making monthly payments still, but the amount you're going to be making is not enough to fully pay the debt off before the statute expires. And at the end of the statute, any remaining balance is going to be written off by the government and go away. You are going to have to disclose your finances fully in this case. The IRS is going to want to know a lot about you. Like I said before, your income and expenses. They're going to want you to prove certain things. They're going to want to know information about where your bank account is, what you have in assets, and so on. The IRS is going to review your ability to pay, and they're going to come up with what they believe is the number that you can pay. And once you both come to an agreement, they're going to periodically reevaluate your situation. So it's not like you get into it, and if you qualify, yay, I'm going to get it all written off after 10 years. They're going to come back to see if you can pay more in the future. Well, what if you're currently in a bad situation? You're unemployed, or your business has failed, and I guess you're unemployed. You have no way to make money, or you make a whole lot less money, and you're not even able to pay your basic living expenses. Well, if your financial situation is tight enough, the IRS may determine that you cannot afford to make payments at all. And in that case, they're going to place you into what's called currently not collectible status. This means no payments are required today and no enforcement action is going to be taken. So they're not going to levy your bank account, which is basically empty your bank account or garnish wages for you or your spouse. You're going to be placed temporarily into that currently not collectible status. Now, remember, your interest and your penalties are going to continue, but so does your 10-year clock. And they're going to continue to review your tax returns and your income to see if you may qualify now to make some payments or even enter in a full payment plan. So once again, not forever, but it's something that's currently going to make your life tolerable, right? Number four, You may be wondering, can I settle for less? And we're talking about the offer and compromise here, and that's where that comes in. So, an offer and compromise, as you may or may not know, allows you to settle your IRS debt for less than the full amount you owe. But it's not based on what you want to pay, it's based on what the IRS believes you can realistically afford using a formula. So sometimes people come to me and they say, "Can I just pay my taxes but not my penalties and interest?" That's not an offer in compromise. Or I'm going to offer them half. That's not an offer in compromise. There is a formula, and you need to walk through that formula to see if you qualify, and if so, what it may be for. And what you have to keep in mind is the larger the balances, the more the IRS is going to take a look at your income and expenses and assets and your ability to pay over time. So, if your financial situation shows that you can pay your tax debt through a payment plan over the statute, the IRS is very unlikely to accept an offer. They're also going to look at what they can get over that statute with an installment agreement versus an offer in compromise to determine what they might accept. But if you truly don't have the ability to pay in full, even to pay over time, then an offer and compromise can be a very powerful option. So, what are some common mistakes that I see people with large IRS balances make? Well, here's a few mistakes that I see all the time. First, they might set up a payment plan that's too high and they're destined to fail. They may call the IRS without really understanding their options. And because of that, they don't know that there's a better option that exists for them. And they enter into the first thing that the IRS offers to them, a full installment payment agreement, for example. This may be the IRS's best option. Remember, they want you to pay as quickly as possible, but it may not be the best solution for you. Or in some cases, they wait too long and they allow IRS enforcement to begin. And they wake up one day and there they are with a empty bank account, or the paycheck of them or their spouse getting garnished. So if you owe the IRS over $50,000 and you're not sure what your best option is, I put a link in the description and below in the comments section, in the pinned comment, where you can schedule a confidential strategy call. We'll take a look at your situation and talk you through what actually makes sense based on your own numbers. Because the right plan can stabilize your situation, but the wrong one can make things worse.